The COVID-19 pandemic has affected millions of lives globally and brought with it a great deal of uncertainty and risks to economic growth. At the same time, it has also put industries in the position to face and embrace new challenges. In the eye of a pandemic, rebooting the Indian financial services sector, a leadership series by Refinitiv, partnered by ET Now, is bringing together the industry's leading voices to address key questions surrounding economic recovery and the role that the banking and financial services sector will play in it. ET Now's Abha Bakaya spoke to an illustrious panel for the final session featuring Supratim Bandyopadhyay, Chairperson PFRDA, Preeti Rathi Gupta, Founder Lakshmi, Suniti Nanda, FinTech Officer Government of Maharashtra, NS Venkatesh, Chief Executive Amphi, Nitin Kamath, Founder and CEO Zerodha, and Gaurav Rastogi, Founder and CEO Kuvera. On the topic, the Investor 2.0, role of financial literacy and the road ahead for the Indian investor.
For an investor, how do they really approach the difficult question of where to put their money now?
The way to play out a stock market is to be with the trend, and so idea is to be long right now. I think I've seen a lot of traders trying to predict that this is the top, it won't bounce from here anymore, and we're still continuing to do it. So the way I think for investors to do is not to put full amount at one time anyways, right? As in it's systematically invest small amounts of money so you get like a good dollar cost average for your investments. I think if someone is investing for the first time, it's always advisable to do it for mutual funds and do SIP because that's the safest way to do it. But I think if someone's investing in the markets, the problem with most retail investors is that we end up trying to go pick up stocks that are underperforming. In the sense, stocks that haven't gone up. So the whole idea is that you buy stock which hasn't gone up, expecting it to go up, which is a very bad strategy of sorts. Now, I mean, in a market like this, the idea is to go buy the best performing stocks and stick along with the performance. Be with the trend types. And that's where I think most retail investors go wrong, which is trying to buy stuff at 52-week lows or things which most likely won't go up.
Gaurav, let me bring you in. Taking from what Nitin said as well, perhaps investors are trying to understand the rationale behind what we're seeing in the equity market.
The good part is when you do financial education, you teach people that, hey, equity has been one of the best asset classes in the past 10 years, 20 years, 30 years, whatever the kind of time frame you look, a long time frame. You will not say 2 years, 3 years, but 10, 15, 20 years. And that's a good part because that gets people excited, that gets people interested that, okay, there is a way where you can get above inflation returns, you can get the equity premium, what is rewarded for actually the risk you're taking. What you learn with experience more than anything else is that it doesn't go up in a straight line. And that's where the whole investor education around how you behave as an investor. What do you do in March, right? And these stories change very, very quickly. In March, you would have been hard pressed to find someone who was bullish. It was almost like, there is no end to this. The pain is going to continue. And I've lived through 2008. I was in New York. I was trading for Morgan Stanley then in the middle of the financial crisis, right? Pretty much not a single trader on the floor could time it as in when the rebound would happen, right? So you would have to be always prepared that, okay, it can go down more, but there is always that risk that what if it turns around and it rallies? And some of it then just goes down to your behavior as an investor, your ability to kind of, live with some of those drawdowns as something which is expected from an equity market.
The role of really improving financial literacy has become even more important in today's environment. What are some of the tools that you feel could be used, could be implemented to ensure that more people are investing responsibly?
Typically in India, for example, we are, the average wallet or portfolio size of an average Indian is about 2 to 3% in equity. So we have a long way to go. The only problem is that, when people see markets at an all-time high and they say, oh my God, I missed the bus and, maybe I should get in quickly. The idea is to look at, okay, maybe in 4 months it's run up so much. So next 4 months, I'm going to make as much money. And I think that's where we come in, and you kind of explain the volatility of the market, the idea that equities essentially are a long-term investment class. So your purview to, or the time frame that you invest in is very, very critical to understand, if you're investing in equities. Also, I think we are unique as a country. I think we have the highest participation on, in directly into equity. And I think that's where, obviously, the last few years have changed that. We see a lot more participation in mutual funds. But I think when it's the first step to, start investing, one should try and go through mutual funds. So I think all of these essentially tools are very, very critical, and that's what we've all been using, particularly, for us in financial services on Lakshmi. Also, I think the ability to really do a lot of online learning. So, for example, we've realized that mind space of a common, every Indian today is, and in these times, is not more than 5 or 10 minutes. So breaking it down into smaller modules of, interesting content, creating, we have so many mediums today. WhatsApp is a great medium. Similarly, you have a lot of other mediums which people are using to access knowledge, content, break it down into bite-sized, relatable, easy to understand.
SIPs, while they have been a favored model, we started to see a little bit of a peak out, perhaps some profit booking, in the last month or so. What's been the response or the kind of flows that you've continued to see since, since Preeti mentioned mutual funds still being one of the safer ways for first-time investors to get into the market?
The mutual fund is a wonderful investment vehicle through which the first-time investor can participate in the markets. So he gets a taste of that. He keeps on averaging his investment, in the sense he's not timing the market. He is putting the money through the SIP route, and he is ensuring that his flows are coming through every month. The SIP flows, if you look at the SIP flows last time was at around 7,500 and odd crores, 7,800 and odd crores. But I would say that it has fallen down marginally, around 150 crores it had fallen down last month. But still at 7,800 crores, the SIP flows is a very robust flow that we can see in this market. The way the financial literacy that we have done for the mutual fund investors through the mutual fund Sahi Hai campaign has been really wonderful, in the sense that we have used all the media. We have also gone digital. Just like the earlier speaker had said, that you should use simplified jargons. Don't put jargons, put simplified terms. We have used the Subbu as a character. And Subbu as a character has explained very, very in simple terms what is the nature of each investment, what is the nature of each scheme, how you should invest. So I think we have catered to the smallest of the small investor, and that is where I think we are able to catch the attention of the retail investor.
Some of the investments under the NPS, the APY schemes, they've also seen a significant rise over the last years. Even though it's a relatively more conservative option, what do you think is leading to investor interest in some of these schemes?
Yeah, we have seen decent growth despite all these challenges, these lockdowns. We have seen about 30% growth in retail and corporate segment. There has been very good growth. And so far as APY is concerned, APY is a guaranteed pension. APY, we have seen almost 1.1 million new customers joining in first 4 months. And this month also, I'm very happy to share that almost 500,000 new customers have joined already. So we are seeing good growth. And I believe our distribution channel mainly are banks, either public sector banks, private sector banks, RRBs. And now, of course, fintech companies are also joining. Payment banks have also joined. They are also seeing that the thing is taken in the right direction. Some awareness definitely we are able to create, but I cannot tell you that everything is dependent on the awareness part. Right now, what is happening, people are looking at the exclusive tax benefits that these products have, which is over and above what you get in other investment vehicles. And secondly, maybe the tax benefit also was extended up to 31st July by Government of India. That also helped quite a lot.
Suniti, I think you'll have a lot to say in terms of actually improving literacy on ground, perhaps how technology can help, the steps that can be taken? We'd love to hear from you.
The way we look at it is it's a optimistic mindset, and it is a time where we do see a lot of opportunity. The way we would look at it is, the bigger umbrella of overall financial inclusion. And from a government standpoint, it has always been one of the key element to focus on. And it's no-brainer that all financial institute, all regulators, all government bodies has been doing many things since ages to ensure that financial inclusion is something that we can achieve. Under that remit, financial literacy, of course, is one of the key pillars. Last 10 years, probably things have been changing because we have been doing a lot in the leveraging technology standpoint. So there are from a many-fold aspect, things like Digital India kind of initiative, things like JAM, whether your Jan Dhan account, your Aadhaar, mobile phone penetration, all these have created a good base. So we definitely have seen a lot of movement in overall technology adoption. Now this is where we'll see that we do believe the financial institutes have played a good role, but since I represent fintechs specifically, and since I work more as a mediator between fintech sector and government, I have a strong belief that this is the time when actually fintechs has to play a larger role. This is the time to really leverage the technology setup that we have, and we definitely are looking up to the passionate entrepreneurs to really focus more on this, leverage the technology, and we'll see a much better growth in overall financial literacy and inclusion is what I would say.